Foster Co. adjusted its allowance for uncollectible accounts at year end. The general ledger balances for accounts receivable and related allowance accounts were $1 million and $40,000 respectively. So that is going to be our accounts receivable and our beginning balance that will be applied to our allowance. So Foster uses the percentage of receivables method, and that is going to be our balance sheet approach. So remember, we're going to be using the percent of our accounts receivable to calculate our required ending balance of our allowance. So we know accounts receivables are estimated to be 5% uncollectible. So what amount should we record as our adjustment? So this is asking us for our bad debt expense. So is the percentage of our accounts receivable going to immediately calculate our bad debt expense? The answer is no. Our allowance is going to start with an ending balance of $50,000 and a beginning balance, as stated up top, $40,000. We know this because $50,000 is going to be 5% times our accounts receivable of $1 million. So it's going to be 5% times $1 million. That's going to give us our $50,000. So that's our required ending balance. We can now use this information to calculate our bad debt expense. That is going to be $10,000 because this is going to be increasing our beginning balance to get to our ending balance. Remember, a bad debt expense is going to increase that beginning balance for our allowance. So our answer here is going to be a $10,000 increase.